Shall I start?
Yes. You can start.
Shall
sir.
I start?
Yes, sir. Please start, please.
Thank you. Respected Chairman of SIRC, Sri Chinnamasan in absentia, and the Secretary Naresh Chandrakeli in absentia. This is Sundararajan, Treasurer of SIRC, welcoming you all, especially today's speaker, Sri Janardana Pai from Ernakulam. Namaskaram. Welcome, sir. And the other participants of the day of this program. I welcome you all. And today's program, the topic being Code of Ethics. This must be new Code of Ethics, sir.
Yeah, I am taking the whole thing, sir.
Yes, sir. Yes, sir. Thank you, sir. Because there are only few corrections in the new Code of Ethics. Otherwise, the old one it continues.
Yeah.
So, yeah. Basically, ethics is the one which I feel has to come from within. And it cannot be regularized by way of rules and anything. Because our living shows our ethics. We are propagating ourselves by way of our living to the entire world of about our ethics, and especially we have an ethics from this area of the world, like India. India, we have definitely a good ethics. Probably that's been taken away for some time, but it'll definitely come back because the people of us, we have not changed. The ethics continues within ourselves. Being within ourselves, and we are only diverted ourselves from this, and basically certain rules have been formed for ethics, like in one of the provisions of nuclear, they say it has to be complied, all the laws of beings has to be complied. Sorry, sir, I'm taking your part for 2 minutes.
No. Please continue. Please continue.
Yeah. It says all the laws of the rules have to be complied with. But we should know what are all the rules we are supposed to comply with. So for that, I think today's Mr. Janardana Pai, sir, will guide us and take us to the ethical world. I think his introduction is very simple because he has given only a few lines of him about him. Let me just read out what he has given to us. He is in practice for the past 22 years and he scored second rank in BCom in University of Kerala in 1992, and he was past chairman of Alapi branch of ICAI. Then he must be knowing about the entire procedures of SIRC and ICAI. I should be thankful to you. So, and is an active Toastmaster and Rotarian, and have been president of the respective clubs as well as handled district posts. Great, sir. And he has got 2 kids, and he is married, and he has got 2 kids. Apart from all this, he is he is an associate of our Guru, Mr. Manoharan, sir. Manoharan Chaudhary Associate. He had worked in that firm in the branch of Kochi. With this background, I'm hereby introducing Sri Janardana Pai for this wonderful program on ethics. Thank you, sir. Please take over the program, sir.
Thank you, sir. Thank you for the introduction as well as the welcome. I hope I am audible.
Yes, sir. Yes, sir.
Yeah. I'll just share my screen. Yeah. Good evening, friends. First of all, I should thank the chairman SIRC, Sri Chinnamastanji, and the secretary, Naresh Giliji. Also, the host or the chairman for this session, Sri Sundararajanji. for giving me this opportunity to speak on Code of Ethics on the SIRC platform. I deem it a privilege and honor to do so. Thank you. So why Code of Ethics? I think our chairman beautifully said, Code of Ethics is something which has to come from within. Friends, the profession of chartered accountancy is one of the most regulated. That by itself is our identity as a member and also the identity of our institute. The accountability of a chartered accountant might stretch beyond our thoughts. And we need to salute our senior members and the think tank who coined the Code of Ethics. I am sure every member of the institute is proud of our Code of Ethics. So what is the relevance of Code of Ethics at this point in time? Like every other code, our code too has undergone changes and modifications to suit the requirements of time. But a major change came in 2019, and that was relevant enough to, considering the fact that profession was faced with difficult questions whenever an entity collapsed or when there was a downfall of an entity, a fraud went undetected. It significantly made a dent in the image of the profession. And with the kind of social media that we have, I need not say they make mountains of molehills, or at times even mountains are created even without a molehill. The institute also recognized the need to sensitize members on the provisions of Code of Ethics. And that is one of the reasons why they made it the CP credit or mandatory for Code of Ethics specifically. Initially, I felt there were many CP programs being held and on Code of Ethics, and it was time for me to dive deep into the significant matters of the code. However, as soon as SIRC announced this program, I got a lot of calls from my friends, and I realized one thing, that it had not sunk in them that it was a mandatory CP requirement. Taking a cue from this, I realized that Code of Ethics is not something we regularly and constantly visit. Having understood it once, we presume that we know it. Also, considering the fact that many of the members would have joined this program to comply with the mandatory requirement, I felt a bird's eye view on the whole subject would be apt, rather than going deep into one particular segment. And that's how the session has been planned. May I request you to reserve your questions for the fag end of this session. However, if I am technically or factually wrong, please feel to interrupt me and correct me. So let me introduce you to the Code of Ethics as it is as on this date. The Code of Ethics is now divided into 3 volumes. First is the Code of Ethics 2019, Part 1, as it is described. And this has been derived from the International Ethics and Standards Board of Accountants Code of Ethics 2018, coined by the International Federation of Accountants. Code of Ethics 2020 comprise of the CA Act and Regulations, the first schedule and second schedule, where misconduct has been specified. And the third one is a case law referencer. When you look at Code of Ethics, in my personal opinion, right now, Code of Ethics 1 is some sort of a guidance for you to and equip yourself to face each particular situation. It is more or like what a coach does to you. Because in cricket, what happens is they can coach you, they can tell you how to bat, how to bowl, but ultimately they actually do not coach you as to how to face a delivery when the wicket is playing bad. It is actually what the Code of Ethics Part 1 does to chartered accountants. It does not specifically mention what is a misconduct, but it in fact gives you, equips you to face situations which may not be so comfortable. As far as Code of Ethics Part 2 2020 is concerned, it is more or less what most of us have learned during our final year of chartered accountancy. While the basic thread remains the same, there have been a lot of notifications, explanations by the council in respect of many of the items. And Code of Ethics 3 is the case law referencer. Now let me take you to Code of Ethics 1. This code was intended to be in application from the 1st of April 2020. However, due to the pandemic, it got extended to the 1st of July 2020. And it was some of the provisions of this were on hold, like the NOCLAR, which Sundarajan sir referred to. Again, the fees from a client, the relative size of the fees, and also the taxation services to audit clients. However, again, let me tell you that all these clauses have also become applicable from the 1st of October 2022. The structure of Code of Ethics number 1 comprises of 4 parts. The first one, complying with the code, fundamental principles and the conceptual framework. Then it describes about the professional accountant in service. Then in part 3, professional accountant in public practice. In part 4, which is divided into 4A and 4B, independence for audit and review engagements and independence for assurance engagements other than audit and review engagements. Now, complying with the code, as mentioned earlier, a distinguishing mark of the accountancy profession is its acceptance of the responsibility to act in public interest. A professional accountant's responsibility is not exclusively to satisfy the needs of his client, but to act in good faith, act responsibly in public interest. The code actually mandates upon certain requirements, and the requirements are highlighted with R. And wherever the application material, which is mostly the food for thought, is marked as A when you go through the code. And in wherever the local laws differ from the code, I need not tell you, the laws or the regulations will prevail. So let us see what are the fundamental principles on which the code has been made. The fundamental principles of ethics establish the standard of behavior expected of a professional accountant. The conceptual framework establishes the approach that an accountant is required to apply to assist in complying with those fundamental principles. So what are those fundamental principles? Integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. So the requirement, what is integrity? Integrity is about what you or how you behave when no one else is around. This is the simplest definition of integrity. This is all about how truthful you are to yourself. The code says The professional accountant shall not knowingly be associated with reports, returns, communications, or other information where he believes the information contains a materially false or misleading statement. It contains statements or information provided negligently, or even it omits or obscures required information where such omission or obscurity would be misleading. If at any point in time, after being associated with a statement, the professional accountant feels otherwise, he shall take steps to either modify his opinion or disassociate from the statement based on his conclusion. Let's move on to objectivity. A professional accountant shall comply with the principle of objectivity by not compromising his professional or business judgment because of bias, conflict of interest, or undue influence by others. If in case he feels his independence and objectivity is compromised due to the influence or relationship or circumstances, he should not undertake the assignment. Again, we move on to professional competence and due care. A professional accountant shall attain and maintain professional knowledge and skill at the level required to ensure that a client or employing organization receives competent professional service based on current technical and professional standards. Act diligently and in accordance with applicable technical and professional standards. He should be able to exercise sound judgment in applying professional knowledge and skill when undertaking professional activities. Continuous update of professional knowledge and skill to facilitate diligence, care, and timely delivery. So basically it says, apart from ourselves being updated on the subjects, the law, the legislation, the requirements, the pronouncement of the institute, we also need to equip and train our staff so that when a work is being executed, they too follow the principles of professional competence and due care. Another important fundamental principle is the confidentiality. It is important. I need not overemphasize the requirement of confidentiality of the information that we get when a client or employing organization is engaging us for any particular assignment. He should be alert to any inadvertent disclosure, including in a social environment and particularly to a close business associate or an immediate or a close family member. Even within the firm or the employing organization, he should sensitize his staff as what they should not be disclosing and what is the amount of confidentiality that has to be retained by them. For example, I should tell you, suppose you are engaging a client who is a superstar, maybe a film star or a cricket superstar, whoever it may be. Even if you're not inclined to speak about that particular client with many others, your staff might always be tempted to speak about them. When they speak, what can they speak, what they should not speak is very important, because maintaining the confidentiality of the affairs of the client who has engaged us is one of the fundamental principles which we should not be forgetting. Last of the fundamental principles is professional behavior. Avoid any conduct that the professional account or should know reputation of the profession that he represents. Avoid such conduct with a reasonable and informed third party would be likely to conclude adversely and which affects the good reputation of the profession. While promoting himself and his work, stay within the boundaries set by the profession. He should be honest and truthful and shall not make any exaggerated claims of the services offered by him, make disparaging references or unsubstantiated comparisons, indulge in advertising is a violation of the guidelines given by the Institute of Chartered Accountants. I'm sure all of you are aware that we are not expected to, or rather we should not be advertising ourselves. And how do we comply with the code? What does the conceptual framework say about how to go about complying with the code? So, when engaged in a professional assignment, the professional accountant, by his experience, will be, he should be equipped to identify the threats, if any, to the compliance with the fundamental principles. What are the threats? What are the types of threats? We will see later. And once the threats have been identified, it is important that he can evaluate the threat. If you can't evaluate the threat, it is difficult for you to mitigate the impact of the threat or bring it to an acceptable level. And last but not least, how do you address the threat by eliminating it or reducing them to an acceptable level? So what are the threats that have been identified by the code? The first one is the self-interest threat. So what is a self-interest threat? It's a threat that a financial or other interest will inappropriately influence a professional accountant's judgment or a behavior. I am approaching a client has approached me rather, and the fees, everything has been discussed. At the back of my mind, if the amount or the fees that has been fixed is playing, and I compromise upon the assignment, or rather the chances of my compromising that assignment because of the amount involved, because of the financial interest that is involved, that will be a self-interest threat. The next type of threat which has been envisaged is the self-review threat. Imagine you are the statutory auditor of a company and you are being engaged for many other assignments. The effect of or rather the impact of whatever you do in such assignments, when they have an impact over the financial statements, it may not be usual for you to re-evaluate that particular assignment which you have already undertaken while conducting the statutory audit of that firm. So that gives rise to a self-review threat. Since you have already done or executed some other assignment, and that particular assignment is has to be reviewed, there are chances that you will not review, or you will take a sympathetic view, or you might even override. because it is natural for you to have that confidence to say that or believe that since I have done it already, I need not review it. So that is what is contemplated as a self-review threat, which is not encouraged by the code. So what ultimately they say is, wherever there is a possibility of self-review threat, you have to take steps to minimize the impact of that, or you will have to disassociate from that assignment. The next type of threat is the advocacy threat. There is every chance that once you are the statutory auditor of a company, you are an independent auditor of a company, naturally there will be an inclination to promote the other services that you provide to the client. That is recognized as the advocacy threat. The fourth one is the familiarity threat. Due to the long or close relationship with a client, you might take a sympathetic attitude towards the work, and because of that sympathetic attitude, the quality of work might suffer. And this is what the threat that is due to such long association or close relationship is contemplated as the familiarity threat. Then there is the intimidation threat. I am paying you so much, so you have to listen to me, you have to do whatever I want because I have engaged you. And if you do not act according to my wishes and fantasies, I start threatening you to do it, and maybe he will say I will remove you, or even make a threat of bringing physical harm to you. These threats have been identified as intimidation threat. So it's important that before taking up the assignment, you should evaluate each of these threats. What are the threats that you are likely going to face? Go deep into it and find out how whether you can minimize the impact of these threats by bringing them to acceptable levels, or even do away with that particular threat. When the professional accountant identifies a threat to compliance with the fundamental principles, the accountant shall evaluate whether the threat is at an acceptable level. Now, what are the factors relevant in evaluating the level of threats? The consideration of qualitative as well as quantitative factors is relevant in the professional accountant's evaluation of threat, as is combined effect of multiple threats if applicable. If the professional accountant becomes aware of new information or changes in facts and circumstances that might impact whether a threat has been eliminated or reduced to an acceptable level, the accountant shall reevaluate and address the threat accordingly. And how do you address these threats? The best method would be to eliminate the threat or apply the safeguards, whatever safeguards that you can bring in. When I say safeguards, when you identify threats, what happens is one of the safeguards that you can apply is bring in an independent review of the work that you have conducted by an independent chartered accountant who has not been involved with that particular work. So this can be a safeguard, and it has been recommended in many of the at many sections in Code of Ethics Part 1. And you have to consider all the significant judgments that you have made before a particular conclusion is reached. Again, one of the important thing which I need not overemphasize is about the independence of the auditor. Now, this has been bifurcated into two to bring in clarity. Because independence of mind, most of us or every one of us have. But they also say independence in appearance. That is something slightly difficult to achieve, but given the situation, we have to maintain that sort of an independence. So let us see what is independence of mind. The state of mind that permits the expression of a conclusion without being affected by influences that compromise professional judgment, thereby allowing an individual to act with integrity and exercise objectivity and professional skepticism. For example, if you are considering or finalizing the accounts of a partnership firm, one of the partners might be close to you. The other partners may not be as close as the other partner. So independence of mind should be applied while taking various decisions, because you are dealing with the accounts of each of the partners. The influence of this particular partner who is close to you should not affect the discharge of your duties. That is predominantly what is contemplated under independence of mind. What is independence in appearance? It says the avoidance of facts and circumstances that are so significant that a reasonable and informed third party would be likely to conclude that a firm's or an audit or assurance team member's integrity, objectivity, or professional skepticism has been compromised. Let me tell you as a practical situation. Again, in a partnership firm, see, every partnership, when they start, they are all charged up. But for some reason, some differences appear between them, and they come to you to get an independent opinion or a proper settlement of their dues. Maybe one partner wants to retire from the firm. So when you are faced with such a circumstances, it is very much important that both independence of mind as well as independence in appearance is also put into practice. By independence in appearance, if we take the earlier case, that partner who was close to me as a personal friend, he might always try to influence me, maybe to reduce the share to the retiring partner or something, whatever. See, I need not tell you what are the methods by which these people try to influence you. It is very much important that your communication to both the partners is with a lot of clarity. It is important to bring them both to a table, communicate with them independently, and also bring them to one particular table together. And this is where your communication skills will be tested. I personally had this opportunity to settle one of our cases. So it was extremely difficult. I need not describe it to you, because once the differences of opinion occurs between partners, one day both of them come together, we have a discussion over cup of coffee and come to certain conclusions as to how they are going to settle the accounts. They go back and then both the sides talk to so many other people also. Naturally, the other person will give lot of suggestions. They will try to impress upon the partners of various requirements, which may be relevant at times, may not be relevant at times. But all these things will have a binding on both the partners' minds. So when faced with this in the next sitting, all these things will come out of their mind. And in between them, when one partner puts forwards one particular suggestion, the other partner may not like it. So he might even raise his voice over certain claims. It is very much important how you maintain your calm and advise them in such a manner that both of them, or all the partners for that matter, understand what you have communicated is fair enough to everyone. I think that is what is contemplated in independence in appearance. Professional skepticism is an attitude that includes a questioning mind and critical assessment of the audit evidence. One audit evidence, if it is contradicting with other audit evidence, then your professional skepticism should work. At this particular stage, I also have to tell you the significance of documentation, because the Code of Ethics, the new code, that is part 1, is all about the fundamental principles, identifying of threats, minimizing the impact of those threats, and or removing those threats altogether. There are few other parts also to this, which is regarding the professional accountant in practice, professional accountant in service, and also the independence requirements. So when you are faced with a threat, when you have minimized the impact of a threat, or you have eradicated a threat, how do you prove it to a third party or the peer reviewer, or for that matter, any authority who can inspect your procedures that are conducted within the firm? In all these cases, documentation alone will help. When threats to independence that are not clearly insignificant are identified, and the firm decides to accept or continue the assurance engagement, the decision should be documented. The documentation should include a description of the threats identified and the safeguards applied to eliminate or reduce the threats to an acceptable level. So the basic thrust of the Code of Ethics Part 1, the new code, is all about fundamental principles, identifying the various types of threats involved, evaluating and reducing or minimizing the impact of these threats, and also about documenting how you have minimized the impact. It speaks about, in the subsequent sections, it speaks about professional accountant in service and in practice. With the earlier code of conduct, there was a feeling that the professional accountant in service, that is chartered accountants in employment, were not actually within the boundaries of the code of conduct, or it did not apply to them, even though at that point also of time also it all applied to them. Now code of ethics, new code of ethics has ensured that the professional accountant in service to is equally liable for his behavior or acts inside the employing organization. I think this is one significant difference in approach, or at least the emphasis has been that every member of the institute, whether he be in service or in practice, is equally bound to protect the interest of the profession as well as create and maintain the image of the profession in public interest. The code of ethics, new code of ethics also mentions about NOCLAR. So what is NOCLAR? NOCLAR is about non-compliance with laws and regulations. It envisages that all the laws, all the regulations have to be viewed by the statutory auditor. While it may be very difficult for a statutory auditor to know each and every law which directly impacts the financial statements or the going concern, whatever, has to be evaluated. The impact, are there any adverse situations? For example, the pollution license of a factory has expired, and we go and say that the going concern, this is fine. That does not look nice. I'll take you to the examples regarding NOCLAR in the next slide. This is one example I thought I should tell you. Then the professional accountant has the responsibility to act in public interest, and objectives of responding to NOCLAR is to comply with the principles of integrity and professional behavior. It's also his responsibility to alert the management to rectify, remediate, mitigate the impact and the consequence of that particular decision, or even deter the commission where it is yet to happen. So NOCLAR can be something which has already happened or is expected to happen or even planned. So the auditor has a responsibility, the professional accountant, both in service as well as the practice, has a responsibility to alert the management to rectify, remediate, mitigate the impact and consequences of such instance, and deter the commission of such event in case it is yet to happen. The provisions of NOCLAR again have been made applicable from 1st of October 2022 to audit assignments with public entities. Applies both to professional accountant in practice and service. So even though now it is applicable only to public entities, if we start putting this into practice right away with all the entities that we are dealing with, when the institute actually makes it mandatory to apply NOCLAR, we will be all equipped. So it is important to sensitize your clients or the employing organization about NOCLAR straight away. That is what I wanted to convey. What could be the examples of NOCLAR? Fraud, corruption, bribery, money laundering, terrorist financing activities, proceeds of crime, banking and other financial frauds, tax and pension liabilities and payments, environment protection issues, public health and safety, all the relevant laws and regulations relating to in this particular indicative list can be examples of no-cler. Then there is the fees and its relative size. The Code of Ethics, the new Code of Ethics says, if you are generating fees which is 15% of more than your total fees for the past 2 consecutive years, it indicates your dependence on the client. So what happens then? There is a self-interest threat as well as an intimidation threat. Self-interest threat is that suppose you were to lose the client, it is your self-interest which is there at the back of your mind. And since the client is aware and is paying you more than 15% of the sizable amount, and he knows it is a sizable amount considering your total revenues, the unscrupulous ones can resort to intimidation. So since both these sort of threats are involved, we need to take, or the code recommends, a couple of actions. First is disclose the same to the client or those charged with governance, and discuss and decide appropriately. This is where earlier I said, you can engage an independent reviewer on the engagement quality. So you are in the 3rd year, and the last 2 consecutive years, the total revenue from this audit client has been 15%. 15% of, am I not audible? I see 2 hands raised by participants. So just wanted to know whether I'm audible or not. Excuse me, am I audible? No response. I see 4 or 5 participants raising their hands. Maybe the organizers have to tell me how to go about it. Is there any problem with the audio? As I have not got any feedback, I'll just continue, hoping that everything is fine. So I was talking about engagement quality review by an independent member, which we call it as pre-issuance review. So in the 3rd year, that is after 2 consecutive years where our total fees has gone above 15% from that particular audit client. In the 3rd year, before issuance of the report, we'll have to engage an independent quality review by an independent member who has not been involved in the work execution before issuance of the report. Of course, you will have to communicate with the client that the cost will be involved. This can be done. Or it can also be in the 4th year, you can make a post-issuance review of the 2nd year execution by an independent review. So which one you have to do will be your decision based on the level of the threat, the safeguards that you apply, etc. The next I would like to discuss was regarding the tax services to audit clients. Again, here there is the threat of self-review as well as advocacy threat. The types of tax engagement that we have, it can be tax return preparation, tax calculation for the purpose of accounting entries, tax planning, and tax advisory, valuations, resolution of tax disputes. Out of this, the first one will be clearly out of the purview of self-review threat or the advocacy threat, because tax return preparation is more or like a what you call clerical sort of work, where the clients provide you with information, and on his confirmation you upload it or file the return. In that particular case, the question of threat does not arise. But in all the other 4 cases, there is always the threat of self-review and advocacy threat. If the result of such an engagement will have a bearing on financials, that is while you are doing the statutory audit, and the result of any of these engagements have a bearing, and it does have a bearing, because all these are financial matters, and it does have a bearing on the financials, audited final financials of the company. We are not allowed to provide tax service to such clients. I am almost done with the Code of Ethics Part 1. Let me now move on to, before I move on to Code of Ethics 2, let me also talk to you about accepting an assignment when fees is pending. See, if the fees is pending from a particular client for a long time, there is no bar as such in signing the financial statements. But a fees outstanding for a very long time will be akin to a loan provided to that particular client, and there the provisions of the Companies Act will apply. There is a self-interest threat because your money is involved there, and the client can, even though he's not paying you, he can extend to intimidation threat also. So what are the safeguards you should be taking to address this threat? Talk to the client and try to obtain partial payments. And in extreme cases, have a reviewer for the work, as I had mentioned earlier, someone who did not participate in the execution. And you will have to convince the client about this and get his fees also paid. But however, suppose it is pending for a very long time, what do you do? So if it is pending for a long time, I am sure none of us are going to be interested in continuing with that work. When the fees has almost become a loan to the client. So you will have to consider whether it is appropriate for you to be reappointed or continue with the engagement. So let's now move on to the Code of Ethics 2, Volume 2. This particular Code of Ethics is the same as what most of us would have learned during our final days with the CA. But it's important that we once in a while at least revise all these things so that we are clear about what we are doing. If we can revisit these provisions constantly, nothing better than that. But at least if we are not doing it constantly, we should revisit them once in a while. As I said, the Code of Ethics 1 was all about getting yourself equipped to face certain circumstances, address those circumstances, and try to minimize the level of threats involved, being involved as the independent auditor or an independent for giving your independent opinion. Whereas the part 2 of Code of Ethics is all about specifying what is professional misconduct. This part 2 is divided into Schedule 1 and Schedule 2. The misconduct which is been mentioned in Schedule 2 is graver than what has been mentioned in Schedule 1. Schedule 1 again is divided into 4 parts. Just for you to understand what is the difference between various parts, if you can see the PPT, deals with the professional misconduct of a member in practice, which would have the effect of generally compromising his independence. Those misconducts have been referred to in part 1. In part 2, professional misconduct of members in service has been mentioned. Part 3 deals with professional misconduct of members of the institute generally. Again, part 4 deals with other misconduct of members of the institute generally. Similarly, in Schedule 2, part 1, it deals with professional misconduct in relation to a member in practice, member who is in practice. Part 2 deals with professional misconduct of members of the institute in general. And part 3 deals with other misconduct of the members of the institute generally. To be more specific regarding the clauses, let's move to the next slide. So these clauses are relatively simple and familiar to you. Part 1, professional misconduct in relation to a chartered accountant in practice. A non-chartered accountant involving himself in practice, that is clause 1. Sharing fees with a non-member. Accepting fees from a non-member, that is reciprocal. You cannot enter into a partnership with a non-member. And securing professional work through non-employee or non-partner. As you all know, we are not entitled to secure professional work through other persons. You cannot engage a non-employee or a non-partner or a non-member to secure work for you. You cannot also solicit professional work. Solicit professional work, as we go later into the presentation, I will describe what is permissible and what is not permissible. Similarly, as you know, advertising professional attainments in such a manner that the recipient is inclined to take an important decision of engaging you. Suppose I am a chartered accountant in practice, and I am also I have given a lot of services to one particular company, of which the prominent service was its internal control. While speaking about the engagement formalities, I give a lot of emphasis to the internal control services that I have given to this particular client. So I am exaggerating my professional attainments. So you are not able, you are not supposed to advertise or communicate with the prospective or existing clients exhibiting your professional attainments in an exaggerated fashion. Then failing to communicate with the previous auditor. We have a dedicated slide for this. We'll get to this. Then non-compliance of the provisions of Section 225 of the Companies Act. Wherever you are being appointed as an auditor, it is important that you ensure that your appointment as such is proper. It is being appointed in a proper general meeting, appropriate resolution is being passed, and even the communication to you that has been given to the by the client mentions all this, says that all these procedures have been followed, and you cross check with the by your interactions whether all these procedures have been followed, is there, that is very important. So if section 225 of the Companies Act is non-compliant, then it is professional misconduct, and you make yourself liable to the penal actions by the institute. Similarly, you are not supposed, as a practicing chartered accountant, you are not supposed to charge fees based on percentage or contingency. Percentage in the sense, suppose you engage in a tax representation assignment and you quote the fees based on the benefit that the client or the employing organization has got because of your representation. That is not permitted. Similarly, contingency is happening of a future event. Suppose you go and get them such and such amount of loan. Again, charging a fees based on that particular event is not permitted. Similarly, a chartered accountant in practice is not permitted to engage himself in other occupations. Here, the institute has given some circumstances where it is permissible. Suppose you are appointed as an independent director, that is director simpliciter in a particular company, where as per the code of conduct, you cannot charge any remuneration other than the sitting fee. That is permissible. But you have to keep in mind that you should not be directly involving in the management of affairs of the company. You cannot take up any managerial roles or sign on behalf of the company. The last one is allows non-member or non-partner to sign on documents on his behalf. I'm sure none of you do this. That is also construed to be a misconduct. Let's now move on to part 1. Part 1 is professional misconduct in relation to members in service. A member in service cannot share his emoluments with others. He should not be sharing whatever salary that he is getting with his co-employees or staff or anyone. He is not supposed to do that for any matter whatsoever. Accepts commission or gratification from an outsider. A member in service, as going up the ladder, he will reach very important positions whereby a third party or a vendor might try to influence him by luring him to commissions or gratifications or gifts, anything of that sort. So if a member who is in service accepts such commission or gratification from outsiders, compromising his position as an employee, and which also brings disrepute to the institute and the profession, it will be construed as professional misconduct. Part 3 of professional misconduct in relation to members generally. Number 1 is acting yourself or claiming yourself to be a fellow chartered accountant when you are not. Number 2 is not supplying the information given by the institute whenever the institute requires you, mandates you to give certain information, and you do not give those informations. Then it it will tantamount to misconduct. Also, if you give false information under clause 6 and 7 of part 1, while advertising or not advertising, you are putting forward your professional attainments, you engage, or while soliciting professional work, you give false information. False information in the sense talking about certain capacities which you do not have, and ultimately letting the client believe that you will be able to deliver, you will be able to execute the work, and getting that information, then you will be liable to professional misconduct under part 3, clause 3. The last is part 4, where other misconduct of members in general is dealt with. The first one is among that is becomes guilty of any offense punishable with imprisonment for less than 6 months. So apart from being a chartered accountant, in your daily life, you are involved with some sort of an offense and ultimately end up with imprisonment for less than 6 months. Then the institute can suo motu take action against you under this clause. Similarly, any action which brings disrepute to the profession or the institute as a result of your action will be construed as misconduct of member in general under Schedule 1, Part 4. Let's now move on to Schedule 2. So what happens in Schedule 2, whatever misconduct that has been mentioned in Schedule 2, the impact is more graver than what has been specified in Schedule 1. So part 1, professional misconduct in relation to a CA in practice. The first one is again confidentiality of the client information. All of you know that every client approaching you is talking to you about his or her finances. And for every person, his or her finances are something which they keep close to their heart. Sometimes even the son does not want his father to know what is his financial position. The husband does not want his wife to know what is his financial position. So in all such cases, disclosing information without the client's consent, when it is close relationship, lot of egos are there. Suppose a husband and wife are about to get divorced or they are already divorced. Sharing the information about the husband, about the wife to the wife, she can always take you to the or institute an action against you with the institute. And even with your the principle of integrity in mind, you should not be disclosing any information without your client's consent. And clause number 2 mentions about certifying or submitting reports without examining related records. This is all about negligence. You do not look into those particular documents or audit evidence which you are supposed to look into and verify and convince yourself and document all those things. You do not do all those things. See, it's so often it happens that if a client is there with you for a long time, and the client also has another chartered accountant with him employed, who has been with that particular employing organization for a very long time, because of your close association or long association with that particular accountant, you might be tempted to issue a certificate without actually looking into or discharging your duty properly. Wherever such thing happens, you should take extra care, keeping in mind the threat that is involved, that is the familiarity threat which is involved. You should take extra care to see that you get your assistants to document whatever you have documented, whatever evidence that you have relied on, and ensure that all these things are relevant and convincing to any third party with putting in professional mindset. Then clause 3 of part 1 says, permit to use the name for vouching for the accuracy of future contingent earnings. Many of our clients approach us to sign projected financials and estimated financials. This actually, and even the project reports. At one point of time, maybe a couple of years back, I should say, even the banks used to insist that we sign all these statements. But as of now, maybe because of the notifications and the interventions of the institute also re-emphasizing on this particular clause, you are not permitted to sign or use your name for vouching for the accuracy of future contingent earnings. Similarly, in clause 4 of part 1, you should not be providing an opinion on financial statement where substantial interest is involved. If you are in your interest in that particular organization is high. First of all, you should not be involved in any attest function where you have interest. But if at all your close relationship or associate has a substantial interest involved, you should abstain from making an opinion on those financial statements. Similarly, if you fail to disclose material fact in the financial statements, see, the Companies Act mentions what actually has to be there in the financial statements, what are the schedules required, what are the disclosures required. And similarly, every other law where accounts are involved specifies. Where it is not specified, you have to go into the actually understand that particular law and find out what is important. Based on your experience, you have to determine whether all the material facts relating to that particular financial statements have been disclosed appropriately. Similarly, failing to report any known material misstatements appearing in financial statements. Performs professional duties without due diligence and grossly negligent. Clause 8 says, fails to obtain sufficient information for expressing an opinion. As an independent auditor, before certifying anything, it is your duty to determine what is sufficient information for you to express opinion on that particular certificate or statement. So, when it is your duty to determine what is sufficient information, you should be able to collect all that sufficient information which is required before making your opinion. Similarly, if you fail to invite attention of any material departure from generally accepted procedure of audit, there are many cases where, as an auditor, because of the access that you have with the company, you get to know many things which may not actually reflect well in the financial statements. In such cases, it is your responsibility to see that it is disclosed appropriately and there is no material departure from the generally accepted procedures of audit. Another very important clause, when the client is engaging you for keeping his money, it is important that you maintain a separate bank account for that, but maintaining client's money. If at all some income has been derived from such amount, suppose you park that amount in an SB account and you earn SB interest, even that interest has to be returned back to that particular client. Similarly, there are many chartered accountants who pay advance tax for their clients or GST for their clients. The client transfers these amounts to chartered accountant's account. Ensure that it is not into your personal account where your transactions are involved, that he is transferring these amounts. It is mandatory for you to have a separate bank account for such purposes, and all the credits and the debits should be available there for an inspection or whenever mandated by the institute or any other party. Let's move on to part 2 of schedule 2, which mentions about professional misconduct of members generally. If a practicing member generally contravenes any of the provisions of the act, regulation, guideline of the institute, then discloses employer's information without the employer's permission, provide false information to the institute and its different authorities. All these authorities maybe would involve the peer reviewer, the other quality reviewers, etc., and even the disciplinary committee of the institute. Defalcates and embezzles money received in his professional capacities. Then part 3 mentions about other misconduct in relation to members generally. Becomes guilty of any offense punishable with imprisonment for more than 6 months, either in a civil or criminal case. So earlier in schedule 1, you saw that if the imprisonment was for less than 6 months, here it says imprisonment for more than 6 months. So you should have understood that the gravity of the misconduct mentioned in schedule 2 is much higher than what is mentioned in schedule 1. Now let us move on to some of the practical aspects where we'll have to equip ourselves by knowing the code of ethics. See, communicating with the previous auditor is a very important factor. The intention of communicating with the previous auditor is not merely the professional courtesy which is involved. The underlying objective is that the member may have an opportunity to know the reasons for the change in order, to be able to safeguard his own interest, the legitimate interest of the public, and the independence of the existing accountant. So if you ask the previous auditor what has actually transpired, or if you ask the previous auditor whether there was any professional reason why he should not be, you should not be accepting, he might open up. And it is his responsibility to open up and let you know if there are important or relevant considerations to be made before accepting this particular appointment. So what is the mode of communication? the mode of communication has to be by registered post acknowledgement due. So it can't be by courier. It can be handwritten acknowledgement if you are meeting personally. It can be through the email ID registered with the institute or the last known email ID. And UDIN. This is these four methods are prescribed. So what happens when you communicate with the previous auditor by his email ID? It is not enough that you communicate with him through the email ID. It is important for you to get an acknowledgement from his side by mail. So this particular part, many of us might forget. That is why I am emphasizing acknowledgement from the previous auditor through the mail is important if you have communicated to him over the mail. As I said earlier, courier or a certificate of posting is not acceptable. The institute recommends that communication with statutory auditor, tax auditor is to be made. For that matter, your communication should be made with any auditor who is involved, irrespective whether he is a tax auditor or even the internal auditor, as a better practice. And even in case of special audit by the income tax authorities, even in that case, communication with the previous auditor is mandatory. What can be the professional reasons for you to not accept the audit assignment? If the employing organization has not followed the procedures like what we saw, the section 225 of the Companies Act, if you have not followed the procedures, the relevant resolution, when was the resolution passed, whether it was passed at an appropriate meeting, if all these things have not been complied with law, that can be a professional reason for you to not accept the audit assignment. Non-payment of undisputed fees other than that of SIRC companies. So what is undisputed fees is that fees which has been recorded as fees payable in the previous financial statement. That is actually referred to as undisputed fee. And similarly, this is the statutory audit fees and not the other fees. But considering the professional relationship or diplomacy, you should ensure that before taking up the assignment, all fees which are due to the previous auditor have been cleared by the client. You should use your capacity to influence the client and ensure that all such pending fees, even fees other than statutory audit fees, is cleared by the client. The other reason for you to not accept an audit engagement would be the issuance of a qualified report. Just because a previous auditor has issued a qualified report, it need not be a reason for you. But for you to accept that, you have to dive deep into that particular situation, document your reasons, convince yourself, and come to a conclusion and document that conclusion also, that issuance of a qualified report was not mandated. It is a very tricky situation because any chartered accountant would not just like that give any qualified report. So if a qualified report has been given, an appropriate evaluation of why that report was given has to be understood before taking up the assignment. It is I hope I am audible. Is the screen share available or is that lost? Can I get some response, please? Maybe anyone from SIRC also can help. Because I think in between the line broke and I had to rejoin. I also see a lot of 8 or 9 participants raising their hands. Maybe if it's regarding the Q&A, we'll reserve it for the last fag. But please let me know whether am I audible? Can I continue? Since there is no response, let me continue now. So the question was asked whether.
Sir, audible, sir, audible.
Okay, okay. Thank you, thank you. So let's continue. Whether derivative transactions are permitted for members in practice. So it is the institute has come out with the clarification saying that it is permitted in his or her individual capacity, means on your own account, not on behalf of the clients, and for which no specific permission is required. But you have to ensure that it is not happening in your sole proprietary or partnership firm. And you can get yourself involved only in futures and options derivatives in respect of equities and currencies, not on commodities. However, members can provide advisory services to clients in this particular regard. Now, as I glance through the FAQs on Code of Ethics, there are interesting findings which we may miss out in the usual course of this thing. I have just put them on the slide. The first one, rendering specified management consultancy services permitted. So you are permitted to render or give service in respect of management consultancy services, but the management, what is management consultancy services has been specified. So I think there are around 28 in that items on that list. You will have to go through that and be rest assured that attest functions are not covered in management consultancy services. Similarly, a member in practice is not allowed to undertake management of NRI funds, broking, underwriting, portfolio management, or acting as a collection or recovery agent. And I found another observation, which was whether a CA in practice needs to obtain trade license from the local authorities. So generally, there is no requirement to obtain any trade license for a CA to be in practice. However, if the local government or local body insists, then we will have to abide by this. There is no bar on recruiting and training staff on behalf of your client, or rendering services, payroll services to the client, or document management services to the client. Document management services is gaining importance these days because as a chartered accountant, you have a repository of the client's documents. So you start owning a portal where the client is given a login and he is able to download his documents, not others' documents, his documents. So that is what document management services, which has been referred to. And even a management consultancy company is not supposed to advertise. And a practicing chartered accountant cannot publish and circulate equity research data, even if self-made, as it would be involving in other business or profession other than that of a chartered accountants. There are many chartered accountants who are involved in equity research data. So if you have this habit of sharing whatever you have data you have prepared with the public, even while maintaining that you are a practicing chartered accountant, it would amount to misconduct. Because by sharing the such research data or making the recommendations, you are involving in other business or profession which a chartered accountant should not be involved in. Similarly, you are not supposed, a practicing chartered accountant is not supposed to get listed on applications or portals of aggregators. By aggregators, I mean, it is just not the listing of listing or directory service. An aggregator, what he does is gets your data, exhibits your credentials to his clients, and induces them to deal with you, or he promises you to give, promises the client, his clients to engage with you. What that becomes is it tantamounts to soliciting of business through the aggregator. Similarly, there are a lot of aggregators who are giving very a wide area of services. So you should keep in mind your professional, the image of the profession, and should not get involved yourself by getting listed on such portals. The widow or legal representative of a partner is entitled to a share of the profits if only it is specified in the deed. So in a partnership deed, if it has been mentioned that the widow of a partner would be entitled to the share of profits, then only the widow will be entitled to share of such deed. In such cases, the sharing of profits with a non-member is permitted. That is what is I wanted to emphasize here. Also, you cannot advertise saying that you are an expert in a specific field, or a firm cannot advertise saying that an expert in such and such segment has joined their firm. Most of the time, you find hospitals giving advertisements saying that such and such a doctor who is an expert in gastroenterology or cardiology has joined their firm. So making that advertisement is for the purpose of luring people or influencing the target audience to approach you. As a professional chartered accountant, you should ensure that such advertisements or media exposure does not happen. Representation to a client or a prospective client should not highlight the segment of service or nature of work done so as to lure the client. As mentioned earlier, exaggerating your services in one particular segment or your assignment with one particular client, etc., should all be within the reasonable or decent limits, and these should not be to influence a client ultimately approaching you. You should not accept the work of a client who was introduced to you by another chartered accountant. This I thought was very important, because at times we take specialized services from our seniors. And ultimately, the client who was continuing with you, suddenly he decides to go to the senior chartered accountant. As the senior chartered accountant, you are not supposed to entertain that client, or you should ensure or discuss with the previous chartered accountant or the person who introduced you to that client, and convince him, or also come to a conclusion that the previous chartered accountant is not able to give him such particular service, and that is the reason for his this particular client migrating to the senior chartered accountant. And basis on communication alone, you can, on the basis of communication both with the client as well as the previous chartered accountant alone, you should do that. And just like that, you should not be accepting the work of a client. You are not expected to print the vision or and mission statement. Now every firm, every chartered accountant firm, or for that matter any firm, is keen to have a vision and mission statement. And as a chartered accountant firm, as an independent auditor, you are not expected to disclose or publish that vision and mission statement of the firm behind your visiting cards. Members who are in practice appointed as directors in companies should communicate with management and ensure that their professional attainment whatsoever are not being referred to in their prospectus or public documents. So this is one of the safeguards every director simpliciter has to take before taking up the assignment as a director. He should be in touch with the management and educate them. Educate them to see that they are not referring his professional attainments to market their business. If you're keen on getting an being ISO certified, no harm in doing that. However, you cannot publicize this anywhere. Then a lot of us are doing certificate courses these days. Certificate courses, of course, by the provided by the Institute of Chartered Accountants of India. But whatever qualification or the description of the certificate course should not be appended as a suffix or prefix to your name on the professional stationery, because the certificate courses are just for you to understand the concept, and this does not make you an expert. However, if you have passed a diploma course of the institute like DISA, or you are an insolvency professional, you can mention that. Whereas courses like certificate course on concurrent audit and other certificate courses like forensic and fraud, all those things you are not supposed to exhibit on your professional stationery. You should not be exhibiting your photograph on visiting cards. And if at all you are taking teaching assignments, those should not exceed 25 hours in a week. So many of our members may be interested in scripting for a movie or scripting a story for a movie. So what is the procedure for you to, how a member in practice can get involved himself in scripting a story for a movie? You need to take a specific permission from the council for this. That is the guidance mentioned in the FAQs on Code of Ethics. So, and you cannot be an actuary or a financial advisor. And similarly, if you are indebted for above, an amount above 1 lakh, it would be a disqualification for you to accept an audit assignment, even though this particular indebtedness is against the fixed deposit. Supposing the client is a bank and you have taken loan against your own fixed deposit. And if the indebtedness is above 1 lakh or more, you are that would be a disqualification for you to, or bar for you to accept that audit assignment. Similarly, we know there are many companies which have branches across the nation. The institute has provided that if you are a statutory auditor with 10 or more partners, you should not be conducting the branch audit of the same company. Such branch audits should be given to the assigned to the, or you will have to tell the employing organization to assign it to local chartered accountants. And there can be exceptions in this, and the two exceptions that they have mentioned is if suppose the accounting records are maintained at the head office where the statutory auditor is sitting, then you can do the work. Where significant operations are at the branch office, then also the statutory auditor can take up the assignment. You should not accept the engagement as an internal auditor if you are the tax auditor of that company, and vice versa. A member or a firm cannot sponsor an event which has been any event for that matter. However, they can sponsor an event organized by the program organizing unit of the Institute of Chartered Accountants of India, provided they have the prior approval of the CP directorate. So just like that, you cannot go and sponsor. First, the POU or the program organizing unit of the institute has to communicate with the CP directorate, and prior approval has to be obtained from the CP directorate. And in that event, that circumstance alone, you can accept a member or a firm can be a sponsor of a particular event. A member in service can represent his employer in tax matters. However, he is not supposed to represent his co-employees in the organization. This is another point I thought which was relevant, which in fact I did not know before in the sense before going through these FAQs. So I thought this was a very relevant thing. A member who in a particular service in employment, he should not be representing his colleagues or other employees of the organization. He can represent only his employer. Friends, this is what I thought I should be discussing with you. In fact, I'll be pleased if all the participants have got a bird's eye view of the code of ethics as such. I'm sure you will not become an expert by one of such sessions, but then if you know where to tap in respect of code of ethics, what precautions to take, what care to keep in mind, considering the various or the detailed requirements of the code of ethics, then my purpose as well as the purpose of the SIRC to have this particular seminar is justified. I think I am open to questions now. Maybe the organizers can help the participants unmute so that wherever possible, whatever I know, I can clarify to the participants.
Okay, sir. Okay, sir.
Yeah. In the meantime, I will go through the question and answers. So a question has come, sir, can a CA conduct audit of a partnership firm in which partners are in far relation with CA? Relation does not fall under defined relations. So in such circumstances, there can't be a close relative and a far relative. That is what I believe. Because such a question arises just because there is a doubt in your mind whether I am right or whether this is possible. And why does that doubt comes in? Because you feel there is some threat, or you will be involved in some misconduct, or your independence will be compromised. That is the reason. So without waiting for the specific provision in respect of far relatives of the CA, I would like you to take the independent view that just ask the question, is he a relative? Me doing the work of this particular client, will it involve a familiarity threat? If the answer is no, go ahead. If the answer is yes, you should not take up the assignment. And many of you have mentioned in the Q&A that it was audible. In fact, I missed on looking into the Q&A box. Thank you very much for that alerts. Can we sign, Ashok Jain is asking, can we sign projected and estimate balance sheet and project report with the declaration of SAE? I think you can do that. You can do that. But you should ensure that you are not vouching for the future earnings or the contingent events. You can do that. Then can a CA give his opinion about the fair value of shares based on expected future earnings? Since the above statement under a CA name expresses an opinion about fair value, not about accurate, still is it all under schedule 2? Maybe this particular point that has been asked, I will have to refer. I don't have an answer straight away for this. Maybe if you can give me or your email ID, or get in touch with me on my email ID, which is mentioned on the PPT, I will get back to you. UDIN means, okay, I suppose this is with regard to the communication with the previous auditor. I did not find any, even though this mention of UDIN has been made, I did not find any specific mention of how or the modalities of generating the UDIN. But if we can generate a UDIN, then on the if we can generate a UDIN for the letter to the previous auditor, that will be adequate evidence that you have communicated with the previous auditor. But make sure you get an acknowledgement from the previous auditor. Unless and until an acknowledgement is received, any other mode will not actually serve the purpose. Because, and I should also tell you, it is the previous auditor is bound or duty bound to respond to such requests. So it casts, the code of ethics casts a duty on the previous auditor also to respond to such communications. So invariably, the members of our members will respond, provided they receive it. That is why I say an acknowledgement to that effect is important.
Sir.
Yeah.
Sir, in the chat box, two more chats are there, sir.
Yeah, I'm just looking into it. Can CA in practice do trading in shares? Okay, that actually depends on the nature of the transactions. You are not expected to do intraday trading. If you are doing intraday trading, it amounts to what you call speculation. So that becomes a separate business. But for the just for the purpose of investment, you invest in shares and derive dividends, and at any later point you even sell those shares, it is fine. But you cannot involve in intraday transactions as it tantamounts to speculation. Is it okay if any CA is partner in firm as well as is having proprietorship? I think that is permitted by the institute. You can be a partner in a chartered accountant firm as well as continue your proprietary business. But the number of audit assignments, suppose for tax audit, 60 has been specified as the total assignments that you can take up. Similarly, for company audit, 30 has been mentioned. So it is all about how you reckon with these numbers. As a partner, how many audits I'll be able to sign on behalf of the firm, and how many I can sign on behalf of the sole proprietary firm. Putting both these together, it should not exceed the specified limits. Whether credit card facility is to be treated as indebtedness, I think it has to be treated as indebtedness only. And an amount more than 1 lakh naturally will disqualify you. Because at that point in time, it remains as a debt to the credit card issuer, isn't it? So to that extent, your interest is still there. Whether GST payments of clients can be made by partnership firm bank account. There is no bar as such. But then what happens is you need to designate a specific bank account for this purpose. You cannot mix your operation account with client's account, client's amounts. So for the dealing with monies of client, you will have to maintain a separate bank account. If somebody is trying to speak, please do. I'm okay, open to questions.
So, Anuradha Parthasarthi, sir. Madam?
Yeah.
Can I?
Yeah,
So
one more question.
Whoever raised the hands, I have enabled the option to speak. Kindly, if any query, ask the sir. Jane Patrick, sir. Charles, sir. Anuradha, madam. Alap Tariq.
No question, sir.
No question. Okay.
Okay, there is one more question in the Q&A box, where a member has family business of her father and she has no siblings. In such case, whether such member is allowed to become partner or handle management of the family business. As the business has come as a lineal descendancy from his father, he can continue to be a partner with the specific permission of the council. But he cannot handle the management of the family business, because that would actually involve in handling another business would involve, maybe it might tantamount to getting involved in another occupation. Kindly let me know whether we should communicate with previous auditor in case of bank branch audit, where name of previous auditors are mentioned in the annexure to the appointment letter. I have not been receiving the same from other auditors. In such cases, it is important for you to communicate with the previous auditor, and all, even if it is a bank audit or any sort of government audit, it is important for you to communicate with the auditor. And as we continue sensitizing members, I hope all the members will realize that it is the duty is cast upon them to respond to such communication. Most often what happens is bank audit communication comes at the very late hours, and if the other previous auditor is also traveling, he might just overlook it and keep it for another day, and ultimately even miss on communicating. I think we'll have to devise a system in our office to ensure that we respond to each and every communication that we receive from another auditor, irrespective of whether it is about continuing with an audit or any purpose, whatever. I think being one family of chartered accountants under the umbrella of Institute of Chartered Accountants, and being proud of the institute and its code of ethics, we should ensure that we all are into the practice of responding when a member actually wants something from us. Can we accept new audit even if dues to previous auditor exist? What if declaration company stating they will settle the dues as early as possible and NOC from previous auditor? In such cases, if the previous auditor also is happy and gets into the better way out would be get into it. So I was talking about dues of a previous auditor, where NOC has been received from the previous auditor, as well as declaration from the company has been received stating that dues will be settled as possible. I would prefer to get this particular thing documented. It can be like a tripartite documentation where the previous auditor, the current auditor, as well as the company is involved, so as to ensure that there is no clarity, there is clarity on the decision arrived at. When this happens, you can go and accept the assignment. If statutory auditor resigns, reason of resigning is getting senior citizen. But when communicating with him, he replies fees pending for X amount, but client says disputed amount. See, the better the practice would be, once you have acquired a client, it is your responsibility to influence the client and see that whatever pending fees to the previous auditor, and for that matter, even if it is fees relating to other services is there, it is better for you, better practice to ensure that these fees is settled. It's not fair on the previous auditor to say that reason for resignation is getting being a senior citizen. But when communicating with him regarding the fees, he says X amount is pending. So, and no objection certificate was what we refer to has to be specific. It has to say either yes or no. It cannot say both. Is it possible for a CA in practice can join some other partnership firm which is engaged in trading activity? I think the only chance where you have a possibility is it is a family business, and that too as a passive partner. No, passive partner. Because if you are engaged in the trading activity on a daily basis, it would tantamount to involving yourself in some other occupation, which will be a misconduct under the Code of Ethics. Furnishing net worth certificate based on valuation done by client and qualified engineers. Is this acceptable? Net worth certificate based on valuation done by client and qualified engineers. See, whenever a certificate is issued, it is your responsibility to say to whom is the certificate issued to and what is that you have relied upon. So when what is relied upon is made clear, I think there is no harm. Valuation purely by the client will not look good, as it's not even a third party opinion. As a client, as a person requiring the certificate, my own values actually does not matter to a third party and should not matter also. Purely you will have to rely on the third party, that is qualified engineers assessment. And you will have to go through the process of relying upon a third party evidence, which has been mentioned by the institute. Where a member has family business of her father, she has no siblings. I think I answered this. Is filing of GST returns of the firm in which spouse is a partner permitted? See, filing of GST returns of a firm in which spouse is partner is more or less an administrative service, because it is upon the firm to confirm the figures. It is just they are relying on your competency to just put the figures as required by the law and upload or submit a return. So it is more or less of an what you call administration service or clerical work. In all such cases, it is important for you to get the concurrence, because having coined or put together all the figures and the final result of that particular return is ready before you, you have to get the concurrence of the firm. And filing of return is not an attest function. If GST tax is deposited first on his or her behalf and later on client remits funds in account, which is not exclusive for client transaction, will it be counted as professional misconduct? See, in such cases, when such questions arise in your mind, what we need to do is go by the reading. You go and read the provision. When the Code of Ethics says, if you are dealing with client's money and it has to be in a separate account, then for no reason can you mix all these things together. If by chance the client actually transfers it to your personal account or the firm's account, then a proper documentation has to be maintained. You should be having the particular documentation stating that it is this account which you had to transfer, and get a communication also from the other client that it was inadvertently that it was transferred to the personal. because documentation will help. And it has to be timely also. Can we form HUF and carry out consultancy advisory services other than audit, etc., and advertise the same? Jalakvora, I will have to come back to you on this. Please, if you are listening to me, please post this on my mail also. I'll come back to you on this because I do not have an answer straight away. And being from Kerala, we are not used to HUFs. So that does not come to the mind. Sir, furnishing net worth certificate based on valuation done by client. I answered this question. And this question also is answered. Can a member in practice, can a member is practice as proprietor also join a firm? That also was answered. So I think I have exhausted all the Q&A in the Q&A box. Thank you, dear friends, for the patient hearing. I am open to questions again. And if at all you have questions which I have not answered, or maybe questions which are coming at a later point of time, you can ping me on WhatsApp or you can mail me the details. I'll try my best to answer.
Thank you, sir. Janardana Pai, sir. Thank you, sir, for a future.
Thank you. Thank you very much.
Session, sir. Thank you. Thank you, sir.
Thank you very much.
Thank you, sir.